This is the Daily Market Comment by Rafi Boyajian. I'm Maria Bashardis. Thanks for joining us at XM.com. Markets appear to brush aside fears of higher inflation after the much-anticipated CPI data out of the United States failed to spark a huge reaction on Tuesday. The U.S. Consumer Price Index rose to a 2.5-year high of 2.6% year-on-year in March, mainly on the back of a jump in gasoline prices. However, Treasury yields went in the opposite direction, suggesting traders have mostly priced in the higher inflation outlook for the next few months. The 10-year yield fell almost 9 basis points, pulling the dollar index down to a near 4-week low today. Fed policymakers have been messaging for some time now that inflation will overshoot their 2% target due to transitory factors and the low base effect from when prices plummeted during the spring 2020 global lockdowns. All the indications are that the Fed has succeeded in convincing markets that this inflationary outburst will be temporary. But as the dollar slid, stocks cheered the data on relief that the inflation spike was more or less in line with expectations. The S&P 500 climbed to fresh record territory. Interestingly, though, the benchmark index was led higher by gains in the Nasdaq than the Dow Jones, which had been the case more recently. The U.S. Food and Drug Administration paused the rollout of Johnson & Johnson's COVID-19 vaccine on Tuesday as it investigates cases of blood clots. Although it is widely expected that inoculations with the Johnson & Johnson vaccine will resume soon, the troubling headlines have nevertheless raised some doubts about the reopening timeline of the U.S. economy. This may have had a dampening effect on value in cyclical shares yesterday and drawn some funds back into tech and growth stocks. Futures for all of Wall Street's main indices were marginally up on Wednesday, ahead of key earnings announcements. The risk-sensitive Antipodian pairs extended their gains today, with both the Aussie and Kiwi surging to 3-week highs. There were no surprises from the Reserve Bank of New Zealand's policy decision, as the central bank kept its stimulus settings unchanged. The pound also advanced against the Greenback, though the euro lagged somewhat. The yen, meanwhile, declined against most of its major peers, unable to find much support from the fresh vaccine setbacks. This was today's Daily Market Comment. Thanks for joining us at XM.com.